we can enter this trade, and this is a time-based reversal setup. Okay, so we don't just stop there. All right, we wait for 9 a.m. Yo, it's coming here with another valuable video for you. Today I'm excited to share with you my proven 5-minute trading strategy. Pay attention. The first thing we must do is we need to identify inside bars. Inside bars are our defining ranges. So defining ranges are macro structures which are actually used to identify the direction of the trend. All right, and this is quite different from the daily ranges. So today I want to show you my simple but proven 5-minute trading strategy. So it's a new week, so I think you should watch this video at least 3 times, because by doing so you are going to understand this real quick. So this is one of the examples which I'll be sharing with us today. So first thing first, we need to identify our inside bar. So first, this is a candle, this is another candle, and this candle never took the highs, neither did it take the low. So automatically we classify this as our inside bar. So what it means is this, which means that the candle before the inside bar is what we call the mother candle. Okay, so the mother candle is actually the candle before the inside bar. So we can call it MB. So I call it a mother bar. Okay, so you can search it up on Google. You will find that the candle before the inside bar is usually the mother bar. Now, why inside bars? Inside bars are very important. They are powerful indication that market makers are getting involved, because inside bar is more like a manipulation of price. All right, so as you can see, look at this, price action kept pushing to the downside. So this is the sell curve of the move. Okay, so we have this as the sell curve of the move, and all of a sudden there was a change in state of delivery. All right, so which means that we are now bullish. Now the question now is, why is it that price didn't continue till infinity? All right, why is it that when price was about to reverse, we were able to identify inside bar? The same thing, look at that, that's an inside bar right there. Okay, so that's not exactly the full concept, but pay attention. So we have this as the mother bar, we have this as the inside bar, and the next bar after the inside bar is usually called the breakout bar or the confirmation candle. Do you understand? So we can go ahead and mark our mother bar low. Okay, so this is what I call the MBL, which is the mother bar low and mother bar high. Now, why are these important? What we are doing is we are simply identifying our defining range. So the defining range will show us the side that price might likely go in the future. So it is very important that we pay keen attention. So once we have been able to identify our defining ranges, then we can be able to go to the lower time frame and look for the dealing range. So pay keen attention. Please subscribe to the channel in case you have not yet. So the next thing we want to do is to identify the stamps. So the stamps, I call the stamp KDRC stamps. Now this stamps is more like a stamp. It shows us exactly that, okay, gives us a confirmation that, okay, price either wants to buy or wants to sell. Okay, so what do we have? We have this and we have this. So if you notice, we have 2 inside bar candles. So whenever we find this, we are going to ignore the first one and pick the second one. Now, 2 things are involved. Whenever we find situations like this, it means that either the highs or the low or our drawn liquidity, either the MBH or the MBL, which is the mother bar high or mother bar low, as the case may be, is going to be a strong zone. Okay, so in this case, what do? We are going to mark our stamp, and this is what we call the KDRC stamp, the KDRC stamp 1. All right, so I'll call it the buy side, the buy stamp 1, and we are going to call it the model tool. So this is what I mean. So what exactly are we seeing here? We have this as inside bar, we have this as our confirmation bar, so automatically this becomes our mother bar. However, this mother bar is within this previous mother bar, and this one had not formed or given us a direction before the next one formed. All right, so to make it simple, just ignore this red one and focus on this particular inside bar, because this is the one we are actually using right now. All right, now the next thing we want to pay attention to is the mother bar high and the mother bar low. So we want to see price take out one of the zones. Now listen, it's not about taking out the zones, we must understand what is in play. Okay, so what do we have here? So we have this as, so let me rename this. So this is a buy stamp, this is a buy stamp 1 and model 2. Why is it buy stamp 1 model 2? One of the reasons is simply because the confirmation candle traded below the inside bar, so it traded outside it. Okay, now if it trades outside it, then it becomes it, but if it trades within it, then we have this as model 1. Okay, so I think okay, we have this as model 1. Sorry about that. The reason is the mother bar, this candle is formed within the mother bar. Okay, so that's very, very important. So the next thing we want to pay attention to is time. So time alignment is also very important. This works on any time, it works on anytime. Just understand the concept and you are good to go. Meanwhile, like I said, we've already started a Comepip mentorship. We've started a new mentorship program where I'll be teaching you this strategy absolutely with full focus, and also where you get to see my daily setups. You don't want to miss out, guys. This is literally an ATM machine. Okay, so let's dive right in. So the next thing we want to do is we also want to see price react. Now if you notice, we also have an inside bar here. How is it an inside bar? Okay, I know most of you didn't see this earlier. So this is a candle and this is a candle, right? So this is an inside bar. So automatically, what do? We mark what? We mark our mother bar. Where's our mother bar? This is a mother bar high, right? This is a mother bar high, and these are mother bar low. Okay, now this is getting very, very interesting. In case you don't get it, I don't expect you to get it on this first watch. I want you to watch the video at least, like I said earlier, watch it at least 3 times and you are going to understand this clearly. Now this is the most important aspect of this concept. Once you go to the 5 minutes, it becomes easier. So the next thing we want to do is identify our stamp. So where is this stamp? So now that we have a new stamp, we are going to work with the most recent price action. So simply put, is the most recent price action. So we extend the stamp, right? So we have this and this, and this is a buy stamp. So I want us to write it. So that you can get to understand it better. So this is buy stamp 1 model, buy stamp 1 model 1. Why is it so? The confirmation candle never took the mother bar candle. So what are we expecting? We're actually expecting a price to pull to the downside. Let me show you exactly what we're expecting. Okay, so if you have been following me, you understand this is why I draw something like this. So remember, this is a buy stamp, so we take the price action to the upside first, then we come down. So this down price action is more like liquidity sweep, more like price taking liquidity, but this time around we know exactly where the liquidity is. We are not doing trying and error. So after that, we are expecting price to break structure. So immediately price breaks structure, this particular stamp have been completed. So 2 things we are expecting. We are either expecting a retracement and continuation, or we are expecting an instant reversal. Now what happens if another form, what happens if another stamp gets formed? If we form another stamp before our entry, then we are going to work based on the current stamp, just as what I just did right now. So what if you are in a trade and another stamp form? This is where you need to identify, was it a buy stamp you took your trade entry from? If it's a buy stamp, the one that just formed, where is it going to take out first? Okay, so in order for us not to overcomplicate things, let's make this simple. So let's play price and see exactly what happens. So basically, as you can see, we have liquidity have been taken from both stamps, both mother bar, right? So we have, remember, this is the actual one we are trading. So we want to see price actually buy from here. So you might say, why are we expecting price to buy from here? I already explained, right? So this is a buy stamp. We expect that price will come to the downside, take liquidity before taking the high. So where are the highs? Where is our drawn liquidity? So automatically this mother bar high becomes our draw on liquidity. So once you are able to understand this, so I call this the common range draw. So this is the common range draw on liquidity. And forget about the name. The most important thing is the concept, right? I put those names there so that I can easily understand what I'm doing. Okay, I've said this 2025, stop doing what the majority are doing. You have been trading smart money. The question is, are you making money? You have been trading ICT. The question is, are you making money? If you are making money, fine, keep it up. But in case you want something better, you want something more realistic, you want something quite simple, something predictable, then I think this is something that you can learn. All right, and mind you, this is very, very objective, and at the same time it is subjective. Like I said, you can project, you can literally predict the next candle, and at the same time you react based on what is happening. Okay, so on this case, this is 6 a.m. GMT plus 1 time, so I'm not willing to take this particular trade. So the next trade we are going to take will be from the 7 a.m., which is the London open. So I'm expecting a buy candle. So we can do two things. We can either go to the lower time frame, right, or we can even wait for this candle close, because we now know that at least the next 2 hours is going to go either to this mother bar high or to this overall drawn liquidity. And I believe you understand why we are taking this as drawn liquidity. In case you don't, go check it again, watch the video again. You are going to understand exactly what we mean. So in case you don't know, one of the reasons is because this is the mother bar. This is the candle that gave birth to the inside bar, which happens to be either a manipulation or consolidation, as the case may be. Okay, so let's go to the 5-minute time frame and look for our entry. So it is getting interesting right now. In case you have questions, feel free and ask me your questions in the comment box below, and I'll try as much as I can to answer your question. So the next thing is time-based entries. Time-based entries are very powerful because it enables you to take trades at the right time. So let me give you an instance. So let's assume that this is the candle. So we have the buy candle here. All right, so we have the opening of price, right? Price push to the downside, and of course price will go to the upside, give it a week, and close right here. So where do we want to engage? We actually want to engage on this opening price or by this week. So how do we know this? This is where the KDRC stamps comes in. Okay, so let's go ahead and proceed. 7 a.m. This is 7 a.m. right? So how do we now know where to enter? Remember that it was the 6 a.m. candle, which is GMT plus 1 time now, UK time, that took out our liquidity, which means we're anticipating price to buy on from the next candle. So exactly what are we waiting for? We are waiting for a liquidity sweep. So the question is, do we have a sweep of liquidity? Do we have a sweep of liquidity yet? Absolutely, right? We have it here. It happened right here. Okay, it happened right there. So look at the beginning. This is the beginning of the 7 a.m. candle. Okay, this is the beginning of the 7 a.m. candle. So immediately after this is formed, the next one, we want to wait and see how price react, and that's exactly what we have here. So we wait for price to close above that candle. So in this case, this is it, and we are going to enter from here. So this is why this is very, very important, because it is quite interesting and either objective and subjective as it were, right? So we want to enter. You have enough opportunity to enter, and where is our target? Where is our first target? So of course, I like taking one particular take profit. But I remember vividly, I actually held this trade till this particular draw on liquidity, and at 10 a.m. I was expecting a reversal, which is this. So let's see if we are going to get there. Okay, so the next thing is this. Where is the next hour? The next hour is about to be formed. Okay, so the same principle as you can see, the 7 a.m. candle just consolidated, didn't even move much. So let's say we've entered already. The next thing we want to wait, we need to wait for the next hour candle. So the next hour candle, what is our expectation? We're expecting that price will also continue to the upside. Okay, so automatically we are going to enter based on this candle. So we can enter right there, and our stop loss can be a little bit lower, and we can target here, which is 1 to 3, or we can as well target this same high. Now, why are we having two take profits in this scenario? It's not always like this. The reason why we're having two take profits in this scenario is because the first mother bar candle we identified was not traded to before the next one was formed, and we did not have opportunity to enter before we spotted the next one. Do you understand? So, and that's why these highs become stronger and stronger. Okay, so automatically we can enter this trade, and this is a time based reversal setup. Okay, so we don't just stop there. All right, we wait for 9 a.m. Okay, now this is very, very powerful. It's getting interesting, which means you don't have to sleep on your chart in order for you to print money. You just need to know when to come in, when to go out. Okay, so you can either trade the expansion, trade the retracement, or trade the reversal, as the case may be. Okay, so this is the 9 a.m. 9 a.m. For us to know whether we are going to continue, if we go to, okay, let's remove the first 9 a.m. candle so that it doesn't show us beforehand. If we go to the 1 hour time frame, so you can see on the 1 hour time frame, we have reached this particular mother bar of drawn liquidity right there, and we have the close of the candle. So we need to see the opening of the next candle. So the opening of the next candle will have to be something below at least the closing price. Okay, if we can see it below the closing price and we know where we are going to, as you can see, there's nothing here. Even talking about market structure, there's literally nothing here to hold price. Okay, so that's the confidence we have that, okay, this is about to push to the upside. So it doesn't stop there. We go to the 5-minute time frame, and what are we looking at in the 5-minute time frame? The same thing. So we check, what do we see? So this is 850. Of course, this is one of my entry model, which you might not have an understanding yet. Okay, but based on what I just explained now, if you watch this video at least 5 times or at least 3 times, I tell you the truth, watch it, go and backtest this same example, right? I tell you the truth, you can be very profitable just trading this particular week. So the next thing that we want to do is we want to wait for the first hour or the first 5 minutes of the next hour. So this is the first 5 minutes of the next hour, which is the 9 a.m. and automatically, of course, I took this trade. If you are my free Telegram channel, by the way, check the video description to join. All right, you will find out that I actually took this particular setup. Now, it did not just stop there. Okay, this is the drawn liquidity. Sorry, this is drawn liquidity right there. All right, so yeah, it was a 2 arrow. I think my stop loss was below this candle. However, it's okay to give it a little bit of space because we have made a lot of money, right? And I'm just, you don't have to catch all of this. I'm just giving you more examples. So for example, you can choose to miss the first hour of the session and trade 8 a.m. and 9 a.m. or trade 9 a.m. and 10 a.m. Now, this depends on what price action is doing, and this depends on when you came to the chart. Okay, so the same principle. If we go to the 1 hour, this is the 1 hour. You see that the draw on liquidity have been reached. Now, after draw on liquidity have been reached, what else? We're expecting two things: either a complete reversal or a little bit of retracement for continuation setups. So how do we know that? It's quite simple. Whenever we have the KDRC stamp 1 model 1, once the drawn liquidity have been taken, we're expecting the next candle to reverse, right? That's what we're expecting. We're expecting the next candle to reverse. So this is how I knew that this next candle is going to sell. Okay, so what do? We go, now that I know, we go, remember this is the closing price. This is the closing price. So we'll go to the 5 minutes. So on the 5 minute, what are we anticipating? We are waiting for price to give us our entry opportunity. And of course, let's play price to the end of the 9 a.m. So this is 9:45, right? And okay, this is 9, and this is the first candle of the next hour. Now at this point, I actually knew that price is going to continue or reverse to the downside, because you see, price never move in a straight line. Price never move in a straight line, but rather price move in a zigzag manner. All right, in forms of order flow, because it is the flow of orders that actually move price. So how do I know that this is going to sell? In this case, if you notice, there was no sweep of the previous candle, no sweep. So that's where our order entry model comes in. Okay, so I don't want to buzz with too much information, so I'm not going to say much about that. So we have this here already. So because of this sweep that already happened a little bit before the opening of price, I know that okay, this is going to sell. So of course, I can sell immediately the close of this candle. All right, so we can actually sell immediately the close of this candle. So when we sell like this, we tend to catch the beginning of the move. But you see, our strategy is not to catch the beginning of the move. Our strategy is to catch the market the way it ought to be. Okay, so this is the buy side and this is the sell side of the curve already happening. And the advantage of the KDRC is that we are able to identify the order curve of the market as early as possible, which brings or gives birth to a high risk to reward ratio. So this was exactly how I entered this trade, and as you can see, price pushed down, retraced a little bit, and you see went to the downside. And of course, the same thing here, the same process. All right, let me not bore you with much information and before price reverses. Okay, so this was the NFP, and if you remember, I did not take this NFP. Okay, and this particular trade, of course, you see NFP is really deadly. I don't do that, and that was because of slippages. If I decide to trade it or trade major news, okay, now major news are just catalysts, so your draw on liquidity doesn't really determine whether you are going to make a loss or a win. All right, the only thing you are going to worry about is slippages, and that's why I don't recommend that for prop firms. So instead of you trading news for prop firms, why don't you trade it on your personal account? Okay, feel free to join the Come Pip Academy and join the mentorship, and feel free check the video description in case you enjoyed this video. Please, the only encouragement I need from you right now is your likes, your comments. Let me know, what do you think about the strategy? What do you think about the video? I remain Kume from Come Pip.